Looking for truly outstanding long-term returns? Does turning just $5,000 into $1.7 million sound good to you? Like the idea of collecting safe, growing dividend income while your wealth exponentially increases? Then you have to check out today's video.
He is a best-selling author.
30-year-old Jason Fieber has a plan.
This guy retired at only 33 years old.
I don't know if I know too many people that have accomplished something like that.
He's really kind of a guru when it comes to passive income.
Before I get into today's content, if you want exclusive access to my personal six-figure stock portfolio and alerts on any new investments I make, check out the Patreon link in the description below. High-quality dividend growth stocks. These are some of the best stocks in the world. After all, it takes a very special kind of business to be able to consistently pay out growing dividends for years or even decades on end. You simply can't write ever larger checks to people if you're not producing ever larger cash flow. I've been investing in these stocks myself for more than 10 years now. Doing so allowed me to retire in my early 30s. I now live off of the safe, growing dividend income my dividend growth stock portfolio produces for me. Now, within the dividend growth stock universe, dividend aristocrats are the creme de la creme. These are stocks that have increased their dividends for at least the last 25 consecutive years. So if you want extremely safe dividend income that's also growing year in and year out like clockwork, dividend aristocrats are a great place to look. Not only that, but these stocks, because they're so high quality, also tend to be great long-term wealth compounders. Today, I'm gonna show you how 5 millionaire maker dividend aristocrats would have turned just $5,000 into $1.7 million. Ready? Let's dig in. This exercise is assuming you invested $1,000 into each stock in October 1991. That's 30 years ago. So that's $1,000 per stock for a total investment of $5,000. That's a rather small investment. Even factoring in inflation, because a dollar back then was worth more, we're talking about an inflation-adjusted total investment of roughly $10,000. So not a lot of money here, yet this investment turned into $1.7 million. The first dividend aristocrat I want to highlight here is American States Water Co., stock ticker AWR. American States Water is a water and electricity utility company. A utility? Boring, right? Well, it's only boring if you don't like to make money. And I'm not talking about just a number on a screen here either. I'm talking about safe, growing cash flow. This company pays out one of the most reliable dividends in the world. This company has increased its dividend for 67 consecutive years. That's the longest dividend growth streak in the world. No company has consistently increased its dividend every year for longer than American States Water. And with a 10-year dividend growth rate of 9.4%, it's not like these dividend increases are pittance. They're running well ahead of inflation. Now, the yield isn't super high, it's only 1.7%, but this is a long-term compounder that can exponentially increase your wealth almost like magic. A $1,000 investment in this stock 30 years ago would now be worth over $289,000. Can you believe that? A single $1,000 investment with American States Water with no further capital invested ever again would now be worth almost $300,000. That's nearly 300 times your original money on a water utility. It's amazing. And since water is quite possibly liquid gold, the oil of the 21st century, it's somewhere that you really should consider being exposed to moving forward. Next up, let's talk about Clorox Co., stock ticker CLX. Clorox is a global manufacturer and marketer of a variety of consumer products. We all know Clorox and its bevy of brands, including Brita, Kingsford, Glad, Pine-Sol, and the namesake Clorox. These are simple to understand products, making this a simple to understand business. But simple isn't bad. In fact, it's often quite the opposite. You should always understand exactly what you're investing in. Another thing that's simple to understand, growing dividends. Indeed. This company has increased its dividend for 44 consecutive years. Yep, even 30 years ago, they were almost 15 years into growing their dividend already. So it's not like this was some new kid on the block back then. And even now, more than 4 decades into growing the dividend, the dividend remains in a great position, largely because consumers still use their products just like they used to use them 10, 20, 30, 40 years ago. With a 10-year dividend growth rate of 7.5% paired with a yield of 2.8%, this stock offers a pretty nice combination of yield and growth. You know what else it offers? Compounding. This stock would have turned a $1,000 investment 30 years ago into $67,000 today. Yeah, not quite as impressive as American States Water, but Clorox still returned you over 65 times your original investment. Who could possibly complain about 65 times more money? By the way, I analyzed and valued Clorox stock not long ago, concluding that shares could be worth over $193 each. With this name below $164 a share right now, this could be an opportunity for the next 30 years. The third dividend aristocrat I want to highlight today is Lowe's Companies Inc., stock ticker LOW. Lowe's is a large home improvement retailer. What's the American dream? Homeownership, right? That's a big part of it. Well, Lowe's caters to that, and in doing so, they profit handsomely. So do their shareholders, which they get reminded of every single quarter when Lowe's drops a beautiful dividend right into their brokerage accounts. Not only that, this is a dividend that is increased like clockwork year in and year out. The home improvement retailer has increased its dividend for 59 consecutive years. Nearly 6 straight decades of ever larger dividends. You have to do a lot of things right in order to accomplish something like that. With a 10-year dividend growth rate of 18.9%, this is no slouch in the growth department. Shareholders need and fear inflation when their dividend income is growing that fast. The stock's 1.6% yield isn't exactly lighting the world on fire, but its compounding prowess is. A $1,000 investment in Lowe's 30 years ago would now be worth $633,000. All you had to do in 1991 was to look at Lowe's, the business model, the catering to the American dream of homeownership and home improvement, and their, at the time, nearly 30-year track record of growing dividends as supreme evidence of the quality of the business. Then you put $1,000 to work with them. That's it. Then watch that initial and only $1,000 investment turn into $633,000 today. That's more than 600 times your original money. Dividend aristocrats like Lowe's can perform magic over the long run if you just let that compounding process play out. I analyzed and valued Lowe's in August, showing why shares could be worth about $209 each. So the stock doesn't even look expensive despite how well it performs. Next, let's have a discussion about Target Corporation, stock ticker TGT. Target is an American retail corporation. Another retailer here, except Target is more in general merchandise, and that's been a great place to be over the decades, as Americans are known to, well, Americans like buying stuff, and Target likes selling stuff. They also like rewarding their shareholders with safe, growing dividends that you can almost set your watch to. They've increased their dividend for 54 consecutive years. The stock only yields 1.6%, but it's not a yield story, it's a dividend growth story. And even 50 plus years into dividend growth, there's no sign of a slowdown here. The 10-year dividend growth rate is 12.3%. Their most recent dividend increase was over 32%. Notice a theme yet? High quality companies tend to increase their dividends because high quality companies are producing increasing profits. It's a virtuous circle that can enrich you. Speaking of enriching you, check this out. Target stock would have turned a $1,000 investment 30 years ago into $225,000 today. More than 200 times your money on a general merchandiser. That's easy money, guys. And this isn't something that you would have had to have amazing foresight on. I mean, we're talking about a company that was already large 30 years ago, and they had already been growing their dividend for nearly 25 straight years back then. So they were knocking on the dividend aristocrat door in 1991. You didn't have to uncover any big secret here. Furthermore, this is a stock that's up 39% over the last year alone. So this isn't a train you had to jump on decades ago in order to see great returns. If you're not already on the train now, consider punching your ticket with some investment capital. Last but not least, let's talk about the dividend aristocrat that is T. Rowe Price Group Inc., stock ticker TROW. T. Rowe Price is an investment management firm. If you think the stock market is a great place to be over the long run, and I certainly do, then you have to like investment managers that are directly exposed to that through the assets they manage. They collect fees on those assets that naturally benefit from a rising tide lifting all boats. What does that mean? Well, more fees, higher profits, and bigger dividends over the long run. This company has increased its dividend for 35 consecutive years. T. Rowe Price is in the business of money, so it shouldn't be a surprise that they're so adept at rewarding their shareholders with reliable rising dividends. The 10-year dividend growth rate of 12.8% comes attached to the stock's current yield of 2.2%. So you're getting very decent yield on top of that double-digit long-term dividend growth. I don't think anyone's complaining about any of that. You know what else nobody is complaining about? This stock's ability to compound and build wealth over the long run. $1,000 invested in T. Rowe Price 30 years ago would be worth $518,000 today. That's more than 500 times your original investment. How's that for compounding? How's that for exponential growth in your wealth? Again, this isn't something that's an old, tired story. The stock is up 36% over the last year alone. There's nothing stopping the next 30 years from being just as good, if not better, than the last 30 years. I analyzed and valued T. Rowe Price earlier this year with an estimation of intrinsic value coming in at just under $198 a share. Looks like another fair deal on a high quality company. So what did $1,000 invested into each of these 5 dividend aristocrats do over the last 30 years? Well, that initial $5,000 sum invested evenly across these 5 dividend aristocrats, that's $1,000 per stock, would have turned into approximately $1.7 million today. That's $5,000 invested and then sitting on your hands for 30 years. Yet you end up with lottery money at the end of it. This is why it's so important to start early, stick to quality, and be patient. Dividend aristocrats can and do perform magic. If you're not already in on the magic show, think about changing that today. Thanks so much for watching. I hope you enjoyed today's video. Give us a like if you did, and let us know in the comments what you think about these millionaire maker dividend aristocrats. Please make sure to subscribe to the channel and ring that notification bell so that you don't miss out on new content. Also, take a look at the description box below for some important links, including the link to my personal stock portfolio. This 6-figure portfolio, which I call the Fire Fund, generates enough passive dividend income for me to live off of. It allowed me to retire in my early 30s. I've made my portfolio entirely accessible over a Patreon, and I also post alerts there whenever I buy or sell a stock. I put my money where my mouth is, and I'm often invested in the same high quality dividend growth stocks that I make videos on. Over the years, I've heard from thousands of investors who have been profiting from many of the same exact stocks that I own. So if you think this is something that you could benefit from as well, check the link in the description to see my portfolio and start getting my buy and sell alerts. I'll see you next time.